Hi, I'm Danielle Balby, one of the web editors here at The Real Deal, and I'm here with Rich Bachman, who covers the commercial brokerage world. And we're here to talk about some news with Wells Fargo. So, Rich, as part of a larger strategy, we heard that Wells is looking to get rid of some non-core business lines, one of those being its brokerage, Eastdil Secured. So when we heard that news last week, what did you think of it?
I kind of thought, here we go again. You know, it seems that every week there's news about commercial brokerages, so much change going on, whether they're merging, they're acquiring, they're starting new lines of business, they're shutting down. And it seems like now it's Eastdil's turn to be on the auction block.
Eastern Consolidated closed down here in New York last month. Cushman recently went public. Newmark also went public before that. So there's a lot of movement just among brokers at those firms. So who would want to buy a commercial brokerage right now?
It depends, on what type of buyers you're talking about. If you're talking about another large brokerage, someone who doesn't have a very strong capital markets platform and wants to compete with those shops that do, might buy a company like, Eastdil. I think that there's investor appetite if you're talking about like the public markets, about Wall Street. We saw that Cushman had a pretty successful IPO. I think that, CBRE, JLL, they're trading at all-time highs. I think that now the public markets are saying that there is, an appetite for a company like this.
Mm-hmm. So when TPG bought Cushman in 2015 and paid $2 billion for it, it was a different time in the market too, right? Is there any reason to think that that same strategy might not play out now?
Yeah, I mean, no one has a crystal ball, but everyone says, how much more time does this expansion have to run? It took TPG a little more than 3 years to get Cushman to the point where they could debut it on Wall Street. I think that there are very few people today who think that the market will be as strong 3 years from now as it is today.
So Eastdil is one of the top firms here in New York City. They're also super active in LA. Who are some of their main rivals and how do they stack up to their competitors?
Yeah, so Eastdil had long been the top investment sales shop in New York. That changed in 2016 when Doug Harmon and Adam Spies left to go to Cushman. They sort of slid in the rankings. They ceded some ground to competitors like CBRE and Cushman. HFF is also another large competitor in that space. But Eastdil still does have a blue chip reputation. They do still have deal makers, and they just brokered a pretty large sale with the $1 billion plus trade of ABC's headquarters to Silverstein Properties.
Mm-hmm. So you mentioned Harmon and Spies. That was, seen as a really big loss to Eastdil. Are there any other people who have left the firm, and how might that loss of talent impact a potential sale?
Yeah, earlier this year they saw one of their top hotel brokers, Larry Wolf, leave and go to Newmark. And certainly, I think that you can certainly make the case that Eastdil is less valuable now than it was when it had those brokers. Mm-hmm. But it is still a large player in that space, and for a firm that is looking to bolster their capital markets presence, there's value there in that. For potentially a private equity buyer who may want to buy it and team it up with a company that does office leasing and make it more of a full service, commercial real estate firm, there's that option too.
If and when a sale does happen, what kind of internal changes might Eastdil see?
I think there could be some big shifts in the company and the way that it's run. One of the big pieces of Eastdil's corporate culture is that it doesn't require its brokers to sign employment contracts to keep them in place. But as everyone says, a commercial brokerage's assets ride up and down in the elevator. So anyone who's going to buy the company wants to ensure that those people are going to stay there for some period of time and would most likely require contracts.
Eastdil operates in the same stratosphere as like the CBREs and JLLs of the world, but do you think that it'll continue on this, same trajectory of becoming a multinational firm, or do you think it'll, remain specialized?
I guess that remains to be seen, right? We saw RKF get acquired by Newmark because Newmark had this sort of gap in retail leasing that they wanted to fill. But Eastdil really is a special case. It is a specialty shop. They focus on capital markets, but they do it very well. Mm-hmm. And they probably do it just as well, if not better, than the capital markets departments in these full service firms. So I think it remains to be seen whether they'll remain as sort of the specialists and the standalone that they've been known for and they've built a reputation as, or if they'll be a part of something bigger.
All right. Well, thank you so much, Rich.
Thanks.